This was a week stocks got the Dickens. Charles Dickens, that is. It was, by all reckonings, a tale of two markets. From Monday through Wednesday, great expectations. Oil moved higher, so did stocks, with the S&P 500 flirting with all-time highs. Then came Thursday and Friday. Bleak house. Government bond yields around the globe fell to record lows in Germany, Japan, and the UK. The reason? Growing fears about global economic growth, central bank policy, and that coming vote on whether Britain will stay in the European Union. Money flowed out of U.S. stocks and into treasuries. U.S. bond yields fell to multi-month lows. Meantime, the Dow Jones Industrial Average was off 119 points today to 17,865. NASDAQ dropped 64. The S&P 500 down 19. And for the week as a whole, the NASDAQ took the biggest hit. It fell 1%. Bob Pisani has more on the change in the market tone this week.
The stock market got smacked around by the bond market and on Friday by the currency markets and uncertainty over Europe's future. It started in the middle of the week as yields on 10-year German bonds approached zero and dropped sharply in the United States. That put pressure on bank stocks on both sides of the Atlantic, with many U.S. bank stocks down 2 to 4% for the week. But it was a lot worse for European names, and it's been that way all year. Big bank stocks like Deutsche Bank and Societe Generale are down more than 20% this year. Late today, an independent poll in the UK showed a jump in support among those who wanted the UK to leave the European Union. That put pressure on the British pound and it strengthened the dollar. Now, the strong dollar is not good for commodities or commodity stocks, so oil dropped and energy and industrial stocks like Chevron and Ingersoll Rand dropped. But don't worry too much. For all this drama, we're essentially flat for the week, and the volume today was only about average. In other words, prices dropped because buyers weren't interested. There was no rush of sellers coming into the market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.